Hey, good morning everyone, and welcome to the PivotBoss pre-market report for Tuesday, June 5th, 2018. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. So far we're holding and continue to hold above the previous month's high, 2741.75. That was a very important key level. Price traded above and below that level throughout much of the day, mostly closing and trading above it. Now we see that price has pulled back into it and been defended so far in overnight trading. Very small range today, only 9.75 points, which is 33% of average daily range over the last 10 sessions. And for the most part, the squeeze is in full effect right now. And while we could still fail, like we mentioned yesterday, any rejection up here would lead to a move back down. At this moment, the market is showing acceptance. It continues to hold at these highs. I would say that if today becomes a digestion day where it mostly just trades in a range, tomorrow could be a fantastic failed new low opportunity for a shot at seeing the next squeeze above. The next time when the market decides to squeeze big, it's going to happen above 2750. And when that happens, you're likely going to see a move that by the end of the day we could be sitting at 2790. So we've seen it happen before at this same zone. We could see it happen again. Here was one of those times here where it just burst higher rallies. Here's another time where it just burst higher rallies. And we're right in the same type of zone. We continue to be within the upward trending structure. So far so good for the bulls. I would say that any failed new low over the next day or two, or any retest of 2731 in the 8 period from below, could be a great launching point for a move into 2790. And perhaps as high as 2800. So we'll see how this one continues to develop. If we take a look here at the NQ, you'll see that this one has been a leader and has already begun its squeeze, big time squeeze on Friday. Yesterday again we were watching for signs that perhaps a failure would occur below 70.90. That never happened. Instead, acceptance occurred and a continuation to the upside. So very bullish behavior. We knew that this had a very good likelihood of a squeeze, and so far this is playing out nicely for a move from 7K into 7200 and perhaps as high as 7300 like we talked before. We mentioned that 7K was a very important level, and that if this thing could really get a squeeze beyond it, we're going to test recent highs. We're almost there now. I would say any pullback again, even as low as 70.50, could be a great opportunity for this thing for another bounce higher, perhaps as high as 7300. But once we get up into this zone, we could take out that high. But once we get up into this area, I would be very, very cautious, because we could be due for another major correction back down like we saw the last couple of times we were at this zone. I think we have a very good likelihood of seeing that again. So if price were to push, say, beyond this high right here, and we get out through into this zone and start to hold for maybe even a week, like we did a week over here, 1 2 3 4 5 6 days before we broke, that could happen again. This would be the target, easy square away, which be at 66.53. That would be on a break of 7200s. So that's the trade that I'll be watching for ahead. But for right now, this thing is squeezing higher. I would say a first pullback offers an opportunity for a new high, and then sell it at an all-time high. Alright, let's take a look now at the crude oil chart. Crude oil has sold off significantly. This was a very, very big rejection of this absorption zone. It was a well accumulated absorption zone at 66.29 to 66.50 over a period of about 3 days, and then on the 4th day did some more and then just broke through it, and it's released the floodgates to the downside. We have now reached the FOMC key level from January 31st. We're also about to hit the 25% extension from this range. This is a significant correction right now, and one thing that's happening in this move is the failure of market structure. So you see the 66.29, that was the most important level on the board because of prior highs here. This is the bottom of the key range, and so in breaking back below that zone, I think, if we cannot get back above that 66.29 soon, we could be looking at a move all the way back across the previous price distribution, which would take us down between 58 and 59. So that would be very significant. This is 58.07 and this is 58.70, which is the extension from that key range, and then this key range here, that would be the whole thing here. So this is significant right now, the way this is happening. That break really opened up some floodgates here, and I think that we could be looking at a move much, much lower. Having said that, there may be one more bounce coming. That next bounce could retest off of 66.29, and from there that could be a great opportunity to get short, and in the very least look to scale out at 2-point increments, 62s, 60s, and 58s, and that's off of the 66s. So that could be a significant move coming here if this thing cannot reestablish acceptance back above 66.29. Lastly, let's look at the gold contract here. This one has turned into just an indecisive type of trade right now. The downtrend is still intact. The bulls have done everything they can to kind of defend, especially this 12.95s. But when you sit at the level that long, you know, it's only a matter of time before the stops come out and you see the next wave down. We saw it over here where it was trying, and then it failed. Right? It's been trying now for a week plus, and it looks like it may fail, just like it was trying over here and it failed. So over here, I would say right now, this one's at risk of seeing a major continuation. You know, the hold off of 1306.60 was real. I mean, on the pullback, they defended staunchly, the bears, and now we could be looking at a continuation to the next target down. If we get to the next target down, that's 12.52s would be the high end target there off of this key range. So that is your 100% target from the edge of that range. That's your next major target. Whether we get that on this next rotation may not happen on this rotation. We might get somewhere into about 12.70. And so let's quantify that really quickly by using our ADR targets. I can double click these green dots right there, bring up the bear targets, click OK. Actually, we'll go up to a 10 period, click OK, and that's from the beginning of the month. Let's go at options expiration here. That'll back us up a little bit to the recent pivot high. So from that pivot high, if we forecast lower average monthly range, we get 12.53.30. So we actually could get down into that zone over the next month. Well, 2 to 3 weeks, since we've already taken a week off. But the high-end target is 12.67.80, which is right about that 12.70. So this is your high probability target. That's your average range target, and together they make your high probability target zone forecasted from the recent pivot high. That's about where we could go if 12.95 fails to hold. Alright, that is it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.